All right, let's turn back to Apple now, which of course warned related to China and that earnings report, the full earnings report coming after the close of trading, with Apple reporting its first quarter results 4 weeks after that lowered revenue forecast. Joining us now, Yahoo Finance's Emily McCormick from the newsroom. And it seems there's a little optimism here surrounding Apple.
Absolutely. Well, Apple has already given this negative pre-announcement, so investors right now are really going to be looking for what the company has to say going forward for the current quarter, which ends in March. And for this fiscal first quarter, we're looking at the first holiday sales decline since the launch of the iPhone. So last holiday quarter, Apple had posted quarterly revenue of $88.3 billion. And remember, with the revenue guidance cut, we're now foreseeing holiday revenue this time around of just $84 billion. And there are 3 things that we're really looking for here. Number 1 is how weak actually were iPhone sales, and by extension, how weak is demand going to be going forward. And this is going to take a little bit of inference based on the commentary that management provides in the earnings release and in the conference call, since Apple is no longer breaking out unit revenues for the iPhone, iPad, and Mac. But again, how weak were iPhone sales, and was this weakness limited to the XR model, or was it across the higher-end premium devices? So that's number 1. Number 2, what's the outlook for China? Like you mentioned, the Greater China geographic segment comprised about 18% of total revenue for Apple in the fiscal fourth quarter, and Apple's supply chain does have significant exposure to China. And given that Apple had cited demand weakness in China as one of the reasons for its negative pre-announcement, that's definitely going to be top of mind for investors in this earnings report that we're getting later today. And third of all, what's the outlook for services? Apple has been touting service revenue as the saving grace for the company to offset some of the lower demand for devices. This is the first time that we're going to be getting gross margin for the service segment revenue. So that'll definitely be a metric that investors will be watching for. And we did get in the pre-announcement that service revenue is expected to grow to $10.8 billion for the fiscal first quarter. So we're definitely seeing some strong growth there, even though right now it only comprises about 13% of Apple's total revenue. So these are really the 3 things we are looking for after the bell today.
Thank you. And joining us now, Wedbush Securities Managing Director of Equity Research, Dan Ives, joining us via the phone. Dan, you heard there Emily's preview of what we could hear from Apple. What to you is going to be most key?
Yeah, and I think that's a great preview. I think that hits on everything investors are looking to see. I think there's 2 big things that investors are focused on. Look, the numbers everyone knows. It's a matter of semantics in terms of where the sort of splitting the hairs is. The focus is on China in the March and June quarter, and if Cook and Apple will make a price cut on 10R. That's the key to stimulating demand that investors are focused on. So I think that's one big thing. The 2, services is going to be the linchpin to the valuation. The gross margins, in terms of a whisper number, I think Street's really looking for that to be double that of hardware gross margins. So I think more granularity around services is going to be key, along with China, to get this stock moving higher. And also, blaming the macro China headwinds, maybe even the weather, that sounds good, but ultimately there needs to be a fess up. They need to take their medicine and realize where they made their mistakes. And investors want to hear that, where the misexecution is and what the strategy is going forward, instead of using the macro card.
Dan, Adam Shapiro here. I thought the strategy, though, was a more expensive phone when they told us they weren't going to report the unit sales. But if they cut the price of the phones, aren't they shooting themselves in the foot going forward?
Look, I mean, that's really the bull-bear debate on the story. But what I'd say is right now, this is an install-based story. The services goes off the install base. And in China, it's a code red situation, because 20% of all iPhone upgrades are coming out of China. If they do not cut prices, you risk losing customers, which is the risk of losing the install base. And that's the worry. And ultimately, there needs to be a sort of delineation. You're going to have high-end phones that everyone knows. But on things like 10R, there should be a 15 to 20% price cut in China.
All right. Dan Ives, thank you. Wedbush Securities, Dan Ives, on pushing for a price cut on that 10R. We'll see what Apple says after the close today. Thanks, Dan.
It would get me in the store. I was looking at a 10R, but I don't want to give up the home button yet.